Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Wednesday, October 10th, 2018. Let's take a look at what's happened today so far. We had, quite impulsive move, one of the biggest down days in a while, and that is confirmation that the bear flag pattern that I recently highlighted, this consolidation right here. You had, the impulsive move down right here, leading up to the consolidation. 2 days of consolidation on decreased volume. In other words, the volume bars on those 2 days were lower than the move down. That's typical. And now you can see so far we're on above average volume. This is what we call an impulsive move. So the breakdown is there. Now, will it play out or not? Again, I covered this recently, and again, you can Google search bear flag patterns. Are pretty simple. They consist of three parts: the move down, which needs to be an impulsive move, followed by a period of low volume consolidation, usually takes the form of this upward sloping flag, and then followed by a breakdown below the flag, and it should be impulsive. And then the measure target would be the distance of the flagpole down to the bottom of the flag there where I drew it, add that to the top. And I just eyeballed it here. I didn't, when I do this on my charts here, I'll show you how I do it. I just take and you can start here. You can start at the top of that candle, or if you want to be conservative, start at the top of this impulsive candle there. We can be conservative, I think, better to do on this one. And then add it to, again, I don't have the lines drawn. I would just use that annotation tool. But if that's the bottom, oh no, I'm sorry, you want to add it to the top of the flag. So like this, I'll put that trend line back there. And again, this you could draw this a little better on the intraday charts because you only have two candles here. So something along these lines. So basically, by taking taking that trend line and then adding it there, you don't have to do the math of trying to say, well, what is 186, 536 minus this plus this, blah blah blah. You just add that there, and it's equal distance. So again, it's a measured target. Now let's look at where it might come in. We do have, and there's some levels I posted for members of the site, some targets on QQQ. I've also posted that in the trading room recently. Some near-term targets. Each target level is where I expect to bounce, but let's just look and we'll do some. This is a public video, so we'll just do some general analysis here. And you can see what I wanted to point out is we're coming up on support, and although I think there is more downside coming in the over time, and we could get it today. I've just right now, I think we're probably going to look at a bounce here soon because we are coming up on some decent support. But I have to say this: there's mixed technicals. I hate to do that. I hate to give, well, the market can do this, the market can do that. Let me just be very clear. I'm leaning in now, and I'm talking active trader stuff for an intraday bounce here. Soon we're coming up on some support levels. I'm going to show you those, but as I've said, and I've been saying for weeks and months now, there's a lot of pent up excesses in this market, excessive valuations at extreme highs, margin. You have to consider that. And margin levels have been very extremely high on the high end of the range. That means on the long side, obviously, it's not short traders loading up. That's mostly the majority of those traders are long. And so what happens is when you have these sharp sell-offs, these breakdowns, selling begets more selling. You get margin calls, so those that are chock full of QQQ and Apple and Amazon, they're forced to sell. Stops get hit. Those that have been dip buying, as I talked about, this is that WTF moment I talked about before. WTF, well, I think you all know what that means, or the what I call the POR, point of recognition, where the dip buyers realize, okay, they came in the other day, they got a little giddy here, thought to get a bounce, and boom, they get that. That's like a kick in the, kick in the stomach, we'll say. So it's not good. And we can certainly go lower. And for a long-term swing trader, if you're not an active trader and you're already short, we've got a lot of shorting ops. Don't worry about the counter trend rallies, counter trend bounces. Lower your stops to either protect, to break even to avoid any losses at this point, or trail them down to protect stops. Again, if you're swinging for more, and if you're an active trader and you want to try to game the rips and dips, then I'm going to show you some support levels that we may get a bounce off. But again, if they really start kicking in here, margin calls start getting hit, stops start getting cleared, there's just not a big, I don't think there was an economic catalyst. I had some issues with the website I've been working on all morning. That's why this video is late getting out there. I haven't looked at the news, but this is just technicals. This is, what we were looking at, and looking for in the charts, and so far it's playing out. So levels to watch, that's why I'm doing this video. We have this long-term trend line again off the 2015 lows right there. You can see the NDX and S&P 500, everything else picks up here on the early 2016 lows. So that's an important trend line right there. And you can see for give or take, we can move these around a little bit, but QQQ is coming up on it. So the downside before we hit that trend line is limited, and I think we'll get a reaction off that level. That's what I'm talking about as far as a quick bounce. And I can draw this different ways. I could tighten it up if I wanted to and show that we're on it, depending on how I want to play around with this trend lines. I always say trend line drawing is an art, not a science. It's subjective. So right now, let's just say we're close, give or take, within maybe 1% or so. Now, and I've talked about that. That trend line can, and I do believe it will go, and I'm still looking for and expecting, as I have been for months, a significant correction, well over, at least 10%, if not more, could be 20% or greater, in that starts in the fourth quarter of this year. And this is probably it. We probably started that. We could go on to make another high here. We could bounce off this support. But what I'm trying to get at is I think in the coming weeks to the next couple months here, before the end of the year, this trend line will go, and I think we'll come on down, like I've been saying for a long time, and revisit these lows. So remember, the stock market or stocks in general tend to fall a lot faster than they rise. So don't underestimate how much more we can go. And if these support levels give way, we're going to go a lot lower. So whether you're bullish and long, just can't tell you what to do, but don't become married to a trade or a position. The common investor mentality, if you bought Apple or QQQ or anything up here, oh well, when it gets back, yeah, I see the charts are starting to look ugly, I didn't expect this kind of selling, I'll just wait to get back to break even. Hey, maybe it happens soon, maybe not, and that I can just tell you that's over time a lot of big fallacy with a lot of traders, investors, is they think that they're going to get back to where they were if they want out. Now you may be happy buying this dip, and that's why I'm doing this video, to give levels, whether you're looking to go long and pullbacks or short on breaks of support, or hold on and continue to ride out a short position that I think has more downside if you're willing to ride out some counter trend bumps. And on that final note, and I talked about this recently, particularly to traders and the investors and traders in the trading room, members of the right side of the chart. I've seen some frustration recently, getting, second guessing your short trades and getting stopped out right before a reversal, or just covering, on quick, a down day like this where you have some quick gains, is you have to put the volatility in perspective. I've talked about this many times. When you're in a rising wedge, prices are compressing. This is price compression. That's what forms a wedge. That's why you have a wide back end for volatile price swings. Prices start to compress. That means the momentum is waning. The buyers, the rallies have less and less vigor. And that's exactly what these divergences, and they are trend indicators, and that's what they tell us. The momentum's waning, and you'll get a likely trend change. And my point being is, once that happens, then volatility expands. So if you're not comfortable with the gains and losses on a 2.25% day, we're down 2.25% right now on QQQ. It cuts both ways. In a snapback rally, we can be up 2%. But I just wanted to say that. And where the point I'm trying to make here is, keep your position size small if you want to play this market, but the volatility is just stressing you out. There's an old saying in Wall Street: sell down. You sell your position down to the level at where you can sleep at night. And if that level is zero, which it is for some people, step aside. Wait. If you don't short stocks and you want to buy the next dip, sit back, wait till the charts firm up. And I'm going to show you some developments now. Let's just jump down. Well, let me go to SPY before I do that, and mention that SPY has clearly and impulsively taken out this uptrend line. That's the one I've been highlighting off the early April lows. So that's not good. It could snap back today. It's a daily candle. It's 12:15 p.m. as I'm doing this video. That's Eastern time, so we have a few more hours to go, less than 4 hours of trading to go. It is possible to see it snap back above there, but at this point, keep in mind, support once broken becomes resistance. While I'm not expecting a snapback rally all the way up there, maybe a little something intraday, maybe not, but keep in mind that's resistance, and that may provide an objective short if we do bounce back to that level. If we manage to somehow rally up and close and get up what we call a stick save, where SPY closes on that level or above it, and then that trend line has been successfully defended again on a daily closing basis. This is a daily chart. All that matters is the daily close. But as of now, this doesn't look good. This is a breakdown. It's impulsive. We just had the breakdown on QQQ. So all the check boxes, I've been looking for continue to get checked. Here's the 2-hour chart of QQQ. It's that same trend line. You can see we're well below it now. So again, we're getting stretched. We're pretty oversold. A snapback rally today could take us back up there, and that may provide another objective shorting entry. Okay, now that was a 120-minute chart. I want to jump over to this hourly and show you something that I'm noticing here. As you know, one of my favorite swing trading time frames is 60-minute chart, and I like to look for divergences on that time frame for swing trading. Even better on the daily if we get it, and we did have the negative divergence I pointed out recently on the daily, and that to me indicates bigger picture, more downside in the coming weeks to months. Very near term, we have potential bullish divergences both on QQQ and SPY. I mentioned these the other day. We had them on the futures, but not on the ETFs. And I said I wanted to see them on the ETFs as well. And again, what I call, and this is just me, I don't think this is any textbook. It's just something I've, my style over the years. I call this potential divergence when you have the lines right now. In other words, the PPO and the MAC and the RSI at this point are making equal or higher lows versus price. I should draw that there for you. This is the divergence line. Okay, just think of that as a line tool, not an arrow tool. I grabbed the wrong one. So we have potential divergence, but the momentum indicators are still pointing down. We're in a pretty strong downtrend right now, near term, and they're pointing lower. However, this one's RSI is turning up. However, excuse me, should we reverse here soon? We'll get that bullish crossover. That's what I want to confirm it, because if we get a bullish crossover in the PPO, we have effectively put in a higher low on the PPO and a higher low on the RSI as well, while prices made a lower low. That is confirmed divergence, and that could spark a rally. And when you get a rally on the 60-minute, bullish divergence confirmed on a 60-minute chart, especially coupled with buy signals. Remember, divergences in themselves are not a buy signal. What would a buy signal be? It can come in many forms. I'll have to study the chart, see if we can get a trend line here. I don't see any well-defined trend lines off the highs, but maybe a big bullish engulfing candle, maybe down on the 60-minute time frame. If we get a candle that engulfs one of these big red candle, or this most recent red candle here, and then follow up on the upside, that would help. And so there's a potential there to spark a rally again. So I'm watching this. These are developments I'm watching. Now, sometimes these divergences are burned through, meaning the indicators, PPO, RSI, MACD, whichever ones you're using, they take out those previous lows, and then you no longer have divergence. And if that happens, and we burn through this 60-minute divergence, not good. We're probably going to go down to those lower end targets that I've been focusing on recently. Okay, and a quick look. I want to keep this video short. I got to get back to trading and posting in the trading room on the site. But a quick look at the futures. This is a daily chart of the NDX or NQ, the Nasdaq 100 E-mini futures. And here's that trend line. This one comes off the 2016 lows, early 2016 lows as well. So it's again a key uptrend line. I'm sure watched by many eyes. I would only imagine lots of reactions along the way, lots of reactions here. And again, I can play around with it a little bit. There's a little flexibility on how to position this trend line. Let me put it back where I had it here. Let me try to grab that, zoom in. But for the most part, where I have us, we're on it right now with maybe a little downside. See if I move it down here and capture the bottom of these reactions on these candles. So give or take, we're either on that trend line now, depending on how this candle forms, how today or the next day closes, or not a lot of downside. So what I'm getting at here is I think the risk reward to shorting, certainly to add a short position here, is not favorable. I'll say that now. There were plenty of ops. We've covered those for weeks now. I'm just telling you, I wouldn't short here. I'd be more apt to go long for a bounce as an active trader, or wait for a solid break. I don't think we're going to get it now, but anything is possible. That's what I keep saying. You just have to be on alert. But I think we'll get a bounce, a reaction off the what I call the initial tag of this support level from above. When I say initial, I mean there were many tags along the way, but it would be the first tag since back here in early April. We haven't visited this trend line in a while. You see, we had 3 tags there, 3 reactions, several in the past back here, 1, 2, 3 at least. So that's it. guys. I'm looking for that, and you know what would be an optimal situation? We don't always get what we want, but an ideal situation would be a reaction off this trend line, a bounce back here, and again, these are the futures. That level would be about 74.45 or so. And you know what I do is I won't wait for 74.45. If too many eyes see it and that looks like it's playing out, you may want to step in a little short. Sometimes they reverse things. If everyone's looking to short the same level, you're either going to do one of two things normally. You're either going to reverse just shy, deny anyone that wanted to eke out the last penny, an optimal entry, or you're going to go on through it, run the stops, head fake everybody, and then reverse. So you start scaling in a little below with room to add above, and then stop out if you go much above that. That's just NQ by itself. Let's look at the hourly chart before I leave NQ. You can see down here, I haven't even had time to update this chart today, but I will right now. You can see what I'm doing here is extending these 60-minute divergences right there. I don't know what that line is there. Let's get rid of that one. So there it is, potential divergence right now on the 60-minute chart of the futures as well. You know, I've covered up. I've had short. I've been in and out all day. Forget about what I tell you, because by the time you read this video, if I'm long right now, which I am, I may be short again. You know, by the time this thing hits the you know, its YouTube channel. So that's that. I really haven't had time to study this 60-minute chart much more to mark up levels, but I want to show you ES and then we'll wrap this up. ES are the S&P 500 E-mini futures. And let's look at the daily chart first. Zoom in here a little bit. So here's the trend line. I had two trend line draws recently. I was highlighting this trend line, which I believe had the better fit. And this is the one I give a higher weighting to, more reactions along the way. And this is what I call my BOD, or benefit of the doubt trend line, because you came in off that same reaction low right here, captured these two reaction lows. Both have been taken out. So the point I'm trying to make, and I showed you a minute ago, SPY broke down on the daily chart. We have clear breakdowns on the S&P 500, and we've also taken out that horizontal support line right here from these reactions right there. We took out this previous reaction high. So again, barring a stick save into the close or a big reversal tomorrow, whatever, that puts the SPY on breakdown. And you know, counter trend, little squiggles aside, and this is the point I'm trying to impress. If you're swing trading short and you have some nice entries on shorts, or even if you added today earlier, or who knows, whatever point, you know, I think we're most likely coming down to at least this level before we get a good reaction on ES. And let me measure that for you out here. That would be, if I use this measuring tool, come down, not much, about 1.37%. And that's probably where we'd bounce. And let's see if I had anything comparable on NQ on the 60-minute chart. Or yeah, oh yeah, I did. I had that trend line which we could place. So yeah, I think that's it. About for anywhere from about here to about another 1.25% or so before we have a meaningful bounce would be my best guess. And then of course, either whether you want to try to game that bounce as an active trader, hold short, or look to reposition short on another bounce, because I think there's more to come based on everything I've seen on both the daily and weekly charts as well. And then to wrap up on, yes, I didn't cover the hourly chart. Let me see if I have anything there to note. You know what? They're stretching the divergences here. There's some divergence on the PPO. I don't have the signal line here, but PPO is making a higher high. RSI is. So we need to reverse pretty soon to keep the divergences intact on the ES. But I just showed you a 60-minute chart, bullish divergences on the SPY, QQQ. I only really focus right now on the large cap. So we do have an active short trade on you know, on the site on TWM, which is a Russell 2000 short, but I can't cover those price targets here. That's for members only, and I'll maybe post an update on the site on that trade. So that's it, guys. Looking at, you know, this bounce is probably, I mean, this drop today. We may get an intraday bounce here, possibly another thrust down. Like I said, the downside at this point is from anywhere from where we already put it in at the lows today, that we may have seen the lows before a decent kickback rally, or maybe another 1 to 1.25% or so downside. So at this point, I'm more concerned about, you know, protecting profits or covering shorts, maybe go long for a bounce again as an active trader, and then looking for the next objective levels to short. And you can see one right here as I'm talking. You can see one of my resistance levels overhead. It's pretty well defined. You have a line right here, reactions there, reactions there, reactions there. So if you're looking for an objective level to short, or to play a bounce up to. Again, try not to milk every penny out. I think the sellers will step in if we get up to that level, but there it is, and that'd be a decent move on the S right there. So there's a potential bounce target for today. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it, and as always, thumbs up on the YouTube channel is greatly appreciated.